Welcome everyone. In this video, we will analyze if ZBCN coin can rise again. Don't forget to subscribe and like, and please watch the video till the end to understand. The potential for this uptrend to be effective in the market in the longer term is quite high. This is because in the past, it has been observed that every time the price touches this line, it initiates an upward movement. So this trend line is perceived by market players as a strong support zone, which leads to buyers getting more involved in the market at this level. If the price approaches this rising trend line again and gets a reaction here, it could be a very important signal both technically and in terms of market psychology. Many traders may consider such support levels as entry points, because historically, a price reversal from here has created a strong buy signal. This could be a very attractive opportunity, especially for investors who are looking for trend continuation. If the price retests this level and receives a strong reaction here, the market may see a move towards higher price levels with increased buyer pressure. In addition, uptrends often create safe havens for traders. If the price approaches this line once again and moves back upwards from here, this could boost confidence among investors and lead to increased demand. Buyers may view such levels as strategic buying opportunities and contribute to the upward movement of the price. Especially if the trend is maintained for a period of time, it shows that the market has a strong structure and buyers are active. Uptrends attract more investors to the market over time, as such situations are often considered a safe and profitable investment area. If the price touches this rising trend line once again and gets a reaction here, a market-wide momentum could be gained and the upward movement of the trend could continue. Such levels also affect market psychology. As traders see the price making a reversal from these levels in the past, they may be inclined to see this as an opportunity and buy more. As a result, if this rising trend line is touched once again and there is a strong reaction here, it could be a positive scenario from both a technical perspective and market psychology. There is only one condition, that this uptrend line is not broken. Translated with DeepL.com free version, Elliott wave theory is a powerful analytical tool that puts market movements in a certain order and tries to understand past price movements. In the current situation, the first and second wave have been completed, but the second wave seems to be at a critical point. The most important thing to note at this point is that the second wave should not fall below the beginning of the Elliott wave. Because in Elliott wave theory, each wave moves within certain rules and limits. If the second wave falls below the initial level, this creates a situation against the structure of the theory, and the wave count becomes invalid. This means a serious signal break, both for technical analysis and for traders. In Elliott wave theory, the third wave following the first two waves is usually considered the strongest wave. The third wave usually creates a strong bullish movement in the market and gains momentum, pushing the price to higher levels. Therefore, for investors, the third wave can be a great opportunity. However, in order for the third wave to start, the second wave needs to be completed properly. That is, the second wave should bounce back without breaking certain levels and limit the price's decline. If the second wave stays within the boundaries set by the Elliott wave theory and does not fall below the initial levels, then a strong groundwork is prepared for the start of the third wave. In this case, the price's minimum target could reach the 1618 Fibonacci level. Fibonacci levels are a frequently used tool to identify potential targets for market moves, and the 1618 level is often a critical target, especially in strong moves, such as the third wave. Reaching this level could be an indication that the market is moving in the right direction and the wave structure is working correctly. However, for this scenario to materialize, the second wave would have to return in the right way and the decline would have to end. If the second wave gets too deep and breaks below the initial level, this could disrupt both the wave structure and the market action. This could prevent the price from rising and make it harder for the third wave to start. However, if the second wave bounces back in a healthy way, the price can be expected to rise strongly and the third wave target may go beyond the 1618 Fibonacci level. When the third wave starts, usually the market gains momentum and there is a huge buying pressure among investors. This movement can cause the price to rise quickly and reach higher levels. For traders, this could be the start of a strong uptrend, where they can take advantage of buying opportunities. However, such movements should always be carefully monitored. This is because each wave can undergo corrections after certain levels, and traders need to analyze the effects of these corrections properly. Fibonacci levels are an effective tool in determining the direction of market movements, especially when used in combination with the Elliott wave. The 1618 Fibonacci level is not only a classic target for the third wave, but it also indicates whether the price will bounce back by reaching this level. If the price breaks this level, higher targets may be on the agenda, and the market movement can be expected to continue. However, in order for the price to break through the Fibonacci levels, there needs to be a strong buying demand in the market. We should patiently wait for the third wave to arrive. On the RSI indicator, currently we can see that there is a clear downtrend on the RSI chart. This suggests that the momentum in the market is weakening and the buyers are unable to gain control. However, in case the RSI breaks this falling trend line upwards, this could be an important signal that a strong bullish movement could start with the price. A break of the falling trend of the RSI indicates that the market is regaining strength and buyers are starting to step in. Such a breakout creates a reassuring situation for traders. Because the RSI shows how strongly an asset is being traded, such a breakout is usually accompanied by an upward movement in the price. So, when the RSI breaks a downtrend, it is not only a technical indicator, but also a sign that market participants are showing a positive trend again. Such breakouts of the RSI indicator often cause excitement among traders, as it can be a strong signal that a new uptrend has begun in the market. If the RSI successfully breaks the falling trend line and the price starts to move upwards after this breakout is confirmed, this could potentially be the beginning of a long-term uptrend. This breakout of the RSI could turn the market into a strong signal to buy, as traders perceive such a move as a positive bias. Such RSI breakouts usually initiate a broader wave of buying in the market. This is because traders see such positive movements in the RSI as a good opportunity for the market to gain momentum. If the price action increases in line with the breakout in the RSI, investors will feel more confident and demand in the market will increase. This could cause the price to accelerate its upward movement and head towards new highs. When the RSI breaks such a downtrend, it usually has a strong psychological impact. This is because traders see it not only as a technical indicator, but also as the market entering a new phase. This can accelerate the rise of the price, especially after a trend break, and the market can take a more positive direction. Traders may take this breakout as an opportunity to buy more, which will lead to a faster increase in the price. We should wait for the RSI to break this trend, and if it does, the price will go on the offensive again. The vortex indicator is a valuable tool used to understand how strong the momentum and direction in the market is. It consists of two lines, the blue line and the red line. The blue line usually signals an uptrend, while the red line signals a downtrend. The intersection points of these two lines determine potential trend changes and the search for direction in the market. In this sense, the blue line crossing the red line upwards indicates the growing strength of buyers in the market and the beginning of a bullish momentum. Currently, we can see that the blue line has started to move upwards. This is an indication that buyers are becoming dominant in the market and prices are trending higher. On the vortex indicator, the blue line moving upwards is quite meaningful. This is because it signals that there are traders buying more in the market, and these purchases continue to push prices higher. If the blue line maintains its current direction and moves further up, it means that the uptrend is consolidating. If the blue line continues to rise and the red line moves further down, this indicates that buyers are in complete control of the market. Buyers' dominance can lead to a sustained upward acceleration of prices. Traders usually consider such situations as a positive signal and tend to look for buying opportunities at such times. This can cause prices to rise faster and more strongly. The vortex indicator is an effective tool for spotting changes in the market, and a steady rise of the blue line can be a solid indication of how strong the uptrend is. This indicates that buyers are gaining strength, the market is changing direction, and more buying pressure is generally coming. The blue line continuing to move upwards is usually a reassuring sign in technical analysis, as such a move can build confidence among market players, leading to more buying. With the blue line rising, traders in the market can also take this signal and start moving. If this trend continues and the blue line rises further, the buying pressure in the market will increase even more. This will allow prices to move even higher. By taking into account such strong technical indicators, traders can reshape their positions and take advantage of the market's strength. This rise in the vortex indicator indicates that the market is experiencing a trend reversal and more buyer participation can be expected. If the blue line consistently holds above the red line, the price can be expected to rise further before stabilizing at certain levels. This is a very important technical signal that buyers are gaining confidence and prices have the potential to rise further. In such an environment, traders may be more likely to trade with a more solid bullish expectation. This creates new buying opportunities for traders, while at the same time indicating increased confidence in the market and an overall stronger trend. By carefully watching this movement in the Vortex indicator, traders can adjust their strategy according to the evolution of market conditions. Vortex is a very good indicator to see trends. Yes, friends, this is how it happened in this video. Don't forget to subscribe and like. See you in the next videos.